Hit that. Guys, welcome to this networking event. This is a huge crowd. This is awesome. And it makes sense because this is Brad Wagstaff. He's CEO of Mogul Capital, and he's got some great stuff for us tonight. So let's get started.
Well, thanks for coming up. So we met a couple months ago doing Instamatch. And my brother was in the Instamatch. I'm sure you guys all watched it. Yeah.
All of you watched it. Oh yeah, Instamatch. They're like, what was it called?
Yeah, so we met and connected and said, hey, we'll asked if we would host one of these and said, sure. So I wasn't super clear on what the crowd was. Done this a few times with kind of college student mentoring, as well as business professionals that will gather together. And so, happy to tell my story and give you my background, and then anywhere you want to take this, I'm happy to go. But so my name's Brad Wagstaff, and I actually grew up here in Heber Valley, so this is home. We went to BYU. I went to BYU. My wife went to BYU. First job out of college, actually went and worked at Intel Corporation in their finance group. So my background is accounting, and I actually grew up in a family business. So you guys have driven by the lake house at Deer Creek, you know that, or Deer Gunner Resort, the rental shop on Deer Creek. So you may have noticed it when you drove up. It most come from Utah County. Anyway, so that was actually my family's business. So my dad was actually in the Toyota business. If you've been in Utah a long time, you might remember Wagstaff's Toyota. They sold it. You remember Wagstaff's Toyota? It's funny, growing up, I'd have people come and sing their jingle to me all the time. Because it was, we're going to Wagstaff's Toyota.
Can we hear it?
I'm a horrible singer, but it was...
We'll put the link in the video.
They did a ton of radio ads and KSL ads, and they were one of the largest Toyota dealers in the state. And so I really grew up going to work with my dad. And at the age of 4, there were 9 kids in our family. At the time, there were 5. So my mom had a bunch of little kids at home, and so my dad would take me to work with them. And I would go down. My grandma worked in the accounting department, and she literally, just to keep me busy, would give me stuff to add up on the adding machine, and literally the kind with the old, paper roll on it. And she would make me add all of these checks up and add it all up. And then she'd make me subtract it all back to 0. And if it didn't go to 0, I had to do it again. And so that was at 4, 5, 6, like my intro to accounting. So my parents actually started the rental shop down at Deer Creek just to give all these kids a job. So I literally grew up there and really learned how to run a business. Like all of us as teenagers would work there, and then when we were in college would literally be the manager and set pricing and order new boats and order new equipment. And it was a really great entrepreneurial learning experience for me. And then went to BYU, studied accounting. First job was in Sacramento, and I went to work at Intel. And it was a finance group. I thought this was going to be awesome. And the first year, I really didn't love it. Like, I was like going to work every day, like literally 8 a.m. All the meetings started at Intel. You had to be there at 7:45 every morning, which I didn't mind. That was great. But after a year, I was just like, okay, I'm not really doing anything that I love. And then started looking around Intel, and the guy who hired me out of BYU, fantastic guy, went to work for Intel Capital. So Intel's venture capital group. Excuse me, I'm getting over a cold. And he went to work for Intel Capital, and so when I said, hey, I'm looking for something else, he said, come be my analyst. And I said, fantastic. And so I spent the next 6 years doing venture capital work at Intel Capital, which is at the time they had about $4 billion under management, and I was in their cellular group. So Intel was trying to get into the mobile phone business, and actually had learned a ton just seeing all of these deals. Oh, Mame was supposed to stay on the other side of the house, but anyway, so I had a great time that really exposed me to investing and how to look at investments and valuations and how to think about strategically from Intel's perspective. Way more important than getting a financial return was actually a strategic return and how it could help drive more business to Intel. So that was a really cool learning experience. And then about 5 years in, I went to do my MBA. So I did my master's in business at the Wharton School and loved it. It was a fantastic experience. And then came back to Intel, continued working in Intel Capital. Actually have some really funny stories. I was, does anybody listen to Business Wars podcast?
Yes. I love it.
I love Business Wars. So have you listened to the Apple versus Blackberry Business Wars?
Mm-hmm.
Okay, so this was really funny. When I was at Intel, I was in the memory business. I was supporting the memory business with investments. And we're making investment, I mean at the time, so I'm going to take you guys back in time. So at the time, everybody was carrying around a flip phone, right? So flip phones were the thing. It was all about cost, getting the cost down. One of my very first assignments at Intel was to make a recommendation to our CEO on whether cameras would ever be integrated into a cell phone. So think about that today. Like, cameras are just completely ubiquitous. If you had a camera without a cell phone, like, I don't know what it would be. It wouldn't be a cell phone. And at the time, and this is just, sorry, one of a bunch of investments that, we couldn't see the future of where this was going. And looking back with hindsight, it's like, how did we not see this? But my recommendation to the CEO was, cameras are too expensive. They'll only be in like the very high segment of the phone. And at the time, that was like 3% of the cell phone market. And the other 97% will never adopt it. They won't spend the money on it. Totally missed it. Like, just totally bombed looking back on not only what cameras in a cell phone, but what that has opened up as far as the number of apps and businesses that are driven through the usage of cameras is phenomenal. But if you listen to the Business Wars, so at the time we made the Series A, B, and C investments into a company called Research in Motion, which is the company that brought up the product Blackberry. Did anybody have a Blackberry?
Blackberry Pearl.
Oh yeah. I sold for Blackberry. I mean, I remember selling them like 10, time flies, probably 15 years ago when they were first a thing. But.
Yeah. So we made the very first investment in Blackberry. At the time, they were using a page network. So literally, they were like a pager, but it had a keyboard on it, a QWERTY keyboard that you could send. It was a page. But it was the first, it used to be a page was a voicemail, right? You page somebody, you leave them a voicemail, it would go, they can pick it up. And so we made that investment and then continued to invest in them as they grew. And this was funny, I still remember, so the iPod, anybody remember the iPod launch? Steve Jobs launching the iPod, this huge launch, and we're sitting at Intel, and we're just trying to sell chips and memory and all the guts of the cell phone. And we're in this meeting, and I have the CEO of our memory division, CEO of our wireless division, and we're talking about there's an iPod, people are carrying a cell phone. At the time, people were carrying a Palm Pilot, right? So people are carrying like 3 devices to try to manage their day. And I said to our CEO, I said, as soon as Apple figures out how to put a phone in this iPod, they're going to rule the world. And his comment was, the guys at Apple are not smart enough to put a phone in an iPod. They'll never figure it out. It is, only the guys. At the time it was Nokia, Motorola. It's like, the guys in Finland are the guys who know how to do that. Nobody else knows how to do this. And anyways, it's just like this series of all these, we think we're the smartest guys in the room, and we just totally bombed, right? We totally got it wrong. And we got some things right. We did a bunch of investments that were great, but that's the nature of venture capital, right? So you make, 50 investments, and 20 of them you strike out, and hopefully you hit a few home runs, and hopefully, so that's what I love doing at Intel, is just trying to figure that out and see the future. But one of the things that we would always say is, we bet on the jockey, not on the horse, right? So the management team, who was there running it, because running these companies is just like a series of pivots, right? You start and you go, hey, this is my business plan, this is what I'm gonna do. And the reality is, like, the world shifts beneath you. And you get going down a path and you go, oh, I thought that was like the smartest idea in the world, and it just, like, a competitor came in, the landscape changed, now what do we do? And that's really what business is. Business is figuring out when to pivot and where to go. And so that's why I love, like, Business Wars. If you guys haven't listened to Business Wars, listen to it, because it really does a nice job telling the story and putting you in the mindset of these entrepreneurs and the decisions that they were facing at the time, that you look back with the benefit of hindsight and you go, well, of course, like, why couldn't they see that? Why couldn't Blackberry, they had a path to just drop the hardware side of their business and go down the path of just using their messaging service. Why didn't they see the writing on the wall that they couldn't compete with Apple, go into this messaging space, which is effectively what WhatsApp is today. So WhatsApp, I don't know what their valuation is, but
it's huge.
$50 to $100 billion valuation that they literally had, like, the WhatsApp of 15 years ago that could have dominated. And WhatsApp isn't that prevalent in the US, but internationally it is the go-to. I was in Dubai 3 weeks ago, and I'm trying to communicate, and I'm like, hey, can you just text me? And he's like, well,
what's your WhatsApp?
What's your WhatsApp number? And I'm like, oh, I gotta get a WhatsApp. But it is totally ubiquitous across the world, everywhere in the United States, because they charge per message. All the cellular carriers charge per message. They figured out a way to send a message as a data packet instead of as a text that goes through your cellular. And so that's just my view on investing is, you're constantly trying to figure it out and figure out what's the right way to go. And, the fun part is figuring it out and figuring out, like, hey, did I make, like, the worst investment of my entire life? Or is this going to go the direction that I think it's going to go, and it's going to be a home run? And so after business school, went back to Intel. About a year later, a guy that I went to working with called me and said, hey, I'm raising a real estate private equity fund. Love you to come run it. And we talked and figured it out and said, let's do it. So I went to work with him, and the business model was we were acquiring shopping centers with a dark big box, right? So everybody knows Costco's, Walmart's, wherever, and when they would exit, they'd make a decision to leave a shopping center, and the impact on that shopping center was disastrous. Like all the other tenants that relied on the foot traffic from Walmart being there, or Home Depot, or all these companies, everybody canceled their leases. So we started on a business model of acquiring these shopping centers and brought in a family entertainment center tenant, and we actually repositioned these big boxes, brought the tenant in. They were doing, we'd come in, buy a shopping center, they would be doing $10 to $12 million in revenue out of one of these big boxes with a couple of $1 million of tenant improvement build out. And so the returns were really, really good. And then once they were there, we could fill up all the other shop space and then lease up the center and sell it. So I did that for a couple of years, and we had just sold the first 3 to a REIT, National Retail Properties, if you guys know them, but public REIT. And we're like, okay, this is the model. Like, we got it figured out. We can go buy these at $30-40 a square foot. We can completely reposition the whole thing, and 3 to 4x our money on this entire investment, and then we lever it up, and all of a sudden it's like a 10x on these investments. And we did this a few times, and things were going great. We're in expansion mode, and we're literally getting ready to close on 2 shopping centers. And I'm talking to the bank. We're scheduled to close next week. And you guys may remember this. This was in September 2008. And, there started to be these whisperings of credit defaults. And,
Everyone's like, what happened then?
yeah. So if you guys don't remember this, 2008, the economy was cranking, and all of a sudden there were these what do they call them? I haven't thought about this for a few years, but basically high leverage loans that were getting done by the banks that they were lending to pretty much anybody.
CMOs?
Right? Yeah. And we were sitting there working with the bank, and we're scheduled to close, and we're going to docs, finalizing docs, and all of a sudden it's like, yeah, we're gonna have to call you back. And that was about 3 weeks before the market just blew up.
Whoa.
And you guys, I don't know, who remembers the market on 2008 when Lehman Brothers imploded, when all these Wall Street banks imploded, and that was the beginning of really like a 4 to 5 year cycle of just no lending out there. And so it's kind of interesting, you think you figure out a business model and you think you're going down the right path and you're killing it, and then something like this happens. And we had hard money we probably had $3 million of non-refundable deposits on buildings, walked away from all that, couldn't get the financing done. Our tenant, who we had brought in that was killing it, doing $10 to $12 million a year per location, their revenue dropped to $2 million. They couldn't pay their rent, and all of a sudden, within a period of like 4 months, we went from like, we're killing it, to I don't know how we're gonna survive. And so it's funny looking back now, all this stuff was going bad, and I just told my partner, I'm like, we got to call our investors. Like we've got to pick up the phone and literally tell them what's going on. It's not good news, and just let them know that we're in this, right? We're in it for them. And so spent 3 days calling all of our investors, telling them the plan, and all of our investors, I thought, man, they're going to be super pissed at me. Like we sold them a story, we told them what was going to happen. It's not happening. Their capital is now at risk. They trusted me. And a lot of these were family and friends, and so delivering bad news isn't fun. But at the end of every single one of those calls, they said, "Thank you for calling me." thank you for picking up the phone, telling me what's going on. And it's funny, I was meeting with our largest investor, who's still my largest investor today. And we were talking about this a couple years ago. He's on a deal with me in Jackson Hole. And he's like, remember when you called me? He's like, so, does anybody know Greg Porter? Or Mason Porter, might be around your age. So Greg, fantastic guy, a good friend of mine from the Sacramento area. And he has a super cool story. I'll just sort of skim over it. He built a company in Utah County called Power School. And literally it's kind of funny, he was a software engineer. He went to Alpine School District and said, why can't I get on and check my kids' grades? Like, the internet's here, what's going on? And they're like, we don't know how to do that. And so he went and said, well, I'll write a program for you. And pretty soon Alpine told the other school districts, and all of a sudden he had a business, like from literally like trying to just identify a problem, solve a problem. And within a couple of years, I mean, they were just exploding. And at the time, Apple, so going back to Apple, right? Apple, Steve Jobs had been fired. He had started his own company. Apple was trying to compete against Dell and Microsoft and Intel and do their own operating system. And they decided they're going to create their own PC, or it wasn't a PC, their own Mac computer, and they're going to go after schools. So they went and made this investment into schools. The goal was to have an Apple computer in every single computer lab, get people hooked on Apple, and then as they grow up, they'd want an Apple computer. And so they made an offer to Power School to buy them, and it was don't quote me on this, but roughly $15 million acquisition price. My investor owned half the company. At the time, Apple was trading at $10 a share. Took 1.5 million shares of Apple. It was in 1998. And you guys can do the math, but Apple's did 3 2-for-1s, a 7-for-1, and then another 2-for-1. I think another 2-for-1 split. And they're now trading at about $175 a share. So, anyways, he's
Is there that
done
much
very,
money?
very well.
Is there that much money?
But
That's a lot.
When I called Greg and said, hey, things are bad, like this is what's going on, but you have my commitment, we're in this, we're gonna figure this out. Years later, like I thought, okay, that was a tough discussion. He thanked me for it, and we kept staying in touch, and we were able to build out of it and grow the company again. But several years later, I'm talking to him, and he's like, do you remember when you called me? Like, well, yeah, I had a bunch of tough discussions. And he's like, you were the only guy who called me. He said, I had hundreds of millions, I don't remember if it was hundreds or tens of millions. He had a lot of money invested in the market, in different deals, in different partnerships, and nobody called him. And he said, I will always trust you because of what you did when things went bad. And he said, that's how you know who you're investing with, is what they do when things are bad, not when things are good. And he's continued to invest with me on every project that I've done. And so that was a good learning experience for me. Like, hey, you have to go do this, and you have to communicate when things are bad. Hey. Sorry, I don't know how she keeps getting
She's
back.
the other guest speaker. She'll be speaking after.
So, anyways, so that was one of these like, hey, everything's going great. Oh my word, the world's going to end. Continue through it, figure it out. And when I look back at that time, that became a time that, in the end, my partner and I going through that, we raised 2 funds. He said, I'll take one, you take one. And we just started recreating our business model altogether. We took back a couple of properties that had gone under default. When they went under default, I'm like, this is the end of the world. How are we going to hang on to them? And literally went and talked to the partners and figure out how to buy them, how to remove the tenant. And then we just took a step back and said, okay, now we have these seemingly, we think, great piece of property. What are we going to do with them? This was in 2009, and went and said, hey, what's the highest and best use for these properties? Came back, and it said hotels. And so I had never built a hotel in my life. I had been a bit in the hospitality business with my parents' restaurant. Intel was an operating company. Venture, the VC side was an investment company. I'd been doing real estate private equity. Kind of said, hey, hospitality is kind of an interesting business because it's an operating business, but it's a real estate deal. I think we can figure this out. Let's go do it. And so called up all of our investors and said, hey, I know this isn't what you invested in. We told you you're investing in these shopping centers we're going to reposition, but this is what we're going to do. We're going to go raise capital and we're going to put it together. And all of our investors said, okay, let's do it. And that was the start of putting together kind of a series of hospitality deals that we now have. We have about 1,000 rooms in Los Angeles that we own. We're developing right now just under 1,000 in the Bay Area. We have 2 big projects there that we hit the pause button during COVID. Return to work, we're optimistic that things are going to get back to normal, and so we're getting ready to break ground on those. And then we've done a bunch of different stuff. We've been opportunistic and owned a portfolio of car washes. You guys may know Quack. Anybody watch their car at Quack? So we were one of the first investors in Quack and actually bought it. It was a series of car washes in Texas and Colorado. Partnered with the operator.
My old business partner's wife is your photographer in Texas.
Oh, really?
Yeah.
For Quack.
Mm-hmm.
Okay, awesome.
Weren't we just saying whoever owns Quack's making bank?
Yeah,
I think we were just saying that. I think we're like, whoever owns that, we're like, oh, we're going to his house Tuesday.
Yeah. So the guys who own it are fantastic.
Yeah.
Jason and Tim, I don't know if anybody knows them, but they're probably some of the best business partners I've ever had because they are 100% honest. Like when they say they're going to do something, they do it. And we knew that we could trust them. And so we invested, and then they had an opportunity to bring in a private equity investment and really expand. And so they bought us out and then took in this VC investment and have been killing it. And in fact, it was funny. Quack, Jason, their CEO, we sold to this private equity company. I'm in Los Angeles in meetings, and Jason calls me up and he's like, "Where are you at right now?" I'm like, "I'm in Los Angeles. I'm getting this room walking to a meeting." And he says, "Well, where exactly are you?" And he said, "Well, I'm in Century City." He said, "I'm gonna have a notary there in an hour." I'm like, "Jason, we already closed the deal. Like, what do you need?" He's like, "Do you remember when you guys said you wanted all the IP for Quack? Well, we didn't transfer it at sale. We're doing a big funding, and I need all that IP transferred back to the company." So we own the duck logo of Quack and all this stuff, and so it was kind of a funny, let's make sure you get all that IP back to you guys. But it's been fun to watch them grow and see their success. They're, like I say, some of the greatest guys. So you should put them on your list of guys to talk to.
I'm gonna send them this video and say, "So are you good for June?" He said you'll do whatever you say you'll do, so.
You might have to go to Sacramento to get them, but.
All right, guys, our next one. We'll be getting discount group lights. We're renting a jet. Brad's paying.
Go out. So anyways, I guess, I mean, as I've gone through this, I mean, every time there's like something tough and you go, oh my word, it's the end of the world, you know, it's really just like, I've got to do, you just figure it out, right? And
Creative problem solving.
There were times, and talk about like a series of pivots, you know, when I went to work at Intel, I mean, didn't think, you know, 10 years later I'd be developing hotels. Like, it's just, you know, you start to figure stuff out, you look for opportunities, and figure out that something that's actually I really, really enjoy. They're fun projects to put together. We've done multifamily investment. We've done multifamily development. We're making a big investment up in the Jackson, Wyoming. I don't know if you guys know that market at all, but Jackson's one of my favorite places, and we're developing a big luxury hotel, luxury residences up there. But, you know, literally I was up there with my family. I'm out for a bike ride. The realtor's there pounding a sign into the ground of this block that's going up for sale, really a corner of a block, and pulled over and said, hey, what are you doing? What are you selling this for? And it's led to, I mean, this was in 2016. We were just up there to, you know, run the river, go mountain biking, go road biking, go to Yellowstone, and turned it into a fun investment that we now have, and we'll do, geez, in total, probably have about $400 million of investment in that market. You know, just looking for an opportunity. Workforce housing has become super critical up there. We're closing on a hotel here in a couple weeks in Jackson and actually repositioning it to workforce housing, where literally all of the billionaires are coming in and buying up Jackson, and there's no availability for the workforce labor to live in Jackson. So everybody's moving an hour and a half away, long commutes, super tough for people to run their business up there. And so we've tried to get ahead of it and going, we bought about 200 workforce housing units up there, and we're developing another 200 right now. And just it's one of those things where you see an opportunity, you see a need, you try to go fill it, you try to solve a problem that people are dealing with, and be a good partner with them. And hey, sorry.
No, you can.
So yeah, so that's what we do. I mean, I run a pretty small fund. We'll do this next year probably $300 to $400 million of investment. Small group. There's 6 guys who work for me, and so we do everything from development to we work with third-party operators that operate our hotels for us. We're managing all of our apartment product in-house, and anyways, it's just there's so many fun things to go do, and it's just find the opportunity, create the vision, and sell that vision of what it can be. And then you know, this same investor, Greg, we were on a flight together a couple months ago, and got talking about, hey, what have you learned over your career that's like the most impactful? And you know, what probably and I shared this with several people, you know, I think it's really our ability to dream big is our most limiting factor. Way more than physical abilities, mental abilities, you know, being charismatic, like whatever. Just I think too many of it. I think we all just sell ourselves short on what we can go do, and you know, I love seeing really cool projects that someone with a really big vision went and said, like, I have this vision that's, I mean, we were just in Dubai. I don't know who's been to Dubai, but the Palm Jumeirah, have you guys seen the Palm out in Dubai? Anyways, it's, you know, the ability to just see things of what they can become is, I think, I think my challenge to all of us is just, dream big, trust the Lord, and figure it out. So, anyways.
You can
So,
cut that clip.
did
Make
I-
that like the first thing. It's like dream big, trust the Lord, and just like hold on. Like,
Hey, a question for you.
Yeah.
When I was in college, I was a TA for Kerry Wasden. If you know who he is. He was
The name sounds familiar.
he was the guy who red flagged Enron about 9 months before,
Okay.
and they kind of crucified him on Wall Street.
Yeah.
I remember they came back later saying, "Oh my gosh, you were right." But great man, and I remember he'd always say to us, "I hope that each of you have the opportunity at some point to lose everything." And hearing you tell your story, I mean, personally as an entrepreneur, having a business that was ridiculously successful, well, not compared to the revenues that you had, but early on, and then it going belly up and losing it because of government regulation or whatever it was, would you consider that also a great blessing, the chance to lose everything and the perspective that you gained?
Absolutely. Yeah. I mean, it's going all in is fun.
Scary.
It's scary, but it's crazy. After a while, you're just like, all right, we're gonna go for this, and we're gonna figure it out. I have no idea how we're gonna get it done, but that's, being in the middle of that, well, it's super stressful while you're in it, and it's like, oh my gosh, what did I get myself into? Man, what you become coming
That's
out
where
of
you
that.
cut your teeth.
Yeah.
So I have another question. So you were talking about the phone stuff, and we were in the car talking about my buddy's book, Richie Norton. He wrote Power Started Something Stupid,
Yeah.
and how that's a bad idea. Every successful business guy is going to tell you, no, that's not a good idea. It's not going to work. That's exactly what happened with phones and cameras.
Yeah.
And like you presented, there's no way this would work. Like, did you see along the line, like, oh no, like I was wrong. Maybe we should shift our focus on investing?
Yeah, it was, unfortunately, we were looking at a very specific investment at the time, and, we had to make a go or no go decision. And in the end, yes, I mean, you look back on this stuff and you're like, man, how did I not see that? But, and then you're smarter next time. There's a bunch of projects, just talking about Jackson Hole, I'm up in Jackson pretty often, and a bunch of projects that we looked at and we bid on, and I can walk around that town and tell you, and same with Los Angeles, same with the Bay Area, deals that we looked at and thought the guys who beat us out on that deal were crazy. And then I see what they built, and I'm like, well, I clearly just wasn't thinking big enough, right? And a lot of times your ability to pay, it's the winner's curse, right? You want to win the deal, but you don't want to be the winner because you were stupid and you just paid way more than it was worth. And I always say, hey, the guy who, you've just got to have a plan, right? You've got to have a path to say, I can make that work, and I can figure it out and have the ability to figure it out and, go for it. But I can't think of a single deal that we've lost that I don't look back and say, I should have been more aggressive, I should have done that deal. And, that's part of the smarting, where it's like, dream bigger. So, but yeah, going through that, like it's
Opens your eyes.
yeah, it's a ride. So,
Yeah, so you said you like going all in. And I love that just because, it's like the adrenaline is there for sure. But how has your investment strategy changed over time? Is it still the same? Are you still going all in, or?
So we have pretty high underwriting requirements. So the deals that we pass on are the deals that just cursory, it doesn't meet our underwriting criteria, and I'm great passing on those. But the ones that, so our underwriting criteria is basically a 30% 5-year IRR is what we underwrite to, which means we have to be pretty selective on deals that we choose to chase, and you know, hope to do fewer deals, but do really good deals that even if they fall short, they're, you know, it's a 20% or a 15, but there's opportunity there. And in the hospitality space, the deals that we choose to develop are deals that, you know, high barrier to entry. So talking you know, really, one of the things that I also learned is whether you're investing in real estate or venture capital or startups, like the analysis is the same, right? You might have different assumptions and you have a different premise of the business model, but from an investment perspective, it's the same analysis. And so, you know, we do a kind of a risk-adjusted return, but we try to take deals that can generate high returns, but then we try to de-risk the deal as much as possible. So we do the things that, like, geez, 5 of my hotel deals we put together, and then we've gone back to the city and negotiated like a credit support facility with the occupancy tax that we're generating. And so, you know, we can still drive those returns, but we've significantly risk adjusted them and de-risked an investment. And so that's what we try to do. We try to identify a good opportunity, and then we try to de-risk it. So, and I think that, I mean, the investments that we do have changed over time, but we've tried to hold that same premise of going to those spaces and trying to de-risk it. So,
How do you find deals?
So in the real estate space, we have kind of a network of brokers that we work with that source deals for us. And then I'm kind of a deal junkie, so I'm always looking for deals, and kind of drives my wife crazy sometimes. But you know, even you know, being on, I mean, all the loop nets and all that. I mean, we've had a few deals in those spaces where we've said, hey, this is a unique opportunity. Let's go do it. Christmas Eve at 2 o'clock in the morning, a deal popped up, and I'm texting the broker, and my wife's like, "What are you doing?" I'm like, "Well, it's a really cool deal." Like,
It's a ministering assignment, honey. I'm just. They just happy Merry Christmas.
yeah. So, anyways, but it's just, I don't know. I have fun with it. Like, to me, every single one of these is like a puzzle, and it's like, okay, can I, especially development deals where it's just a blank canvas, and it's like, okay, what can you dream up? Like, what's the highest and best use for this? Those are what's really fun. I mean, we're doing some repositionings where you're buying an existing asset and creating a lot of value by changing the use or making an investment and you know, growing rents. But the development deals are really what I have fun with. So, and it's really that creative time. Like, once we get into the actual construction of it, it's like, all right, we just got to do this. I got to go get the financing. I've got to raise the equity. But the creative piece of a development deal is where I have the most fun. So,
How do you generally structure the equity of these deals? Like, you get financing, and then you also have your equity partners. Like, how does that work?
Yeah. So I'm typically the lead investor and the majority investor in the deals, and then bring in LP equity partners. And so I'm typically funding all of the pre-development work. So a lot of times that's land acquisition. It's, you know, a couple $1 million in design and entitlement work. And then we really try to get a deal shovel ready and then bring LP investors in. And that's when we bring in debt. So we bring in construction debt at the time, and and then we have kind of a development fee that we charge, and then we have a back-end promote. But all of our investor capital that we raise, we put senior to our promote. So our promote's very back-end loaded. We get all of our investors' capital back plus a pref before we participate, and our investors like that structure. So that's typically how we structure the deals.
Nice. Are you generally prompt, like, what's the preferred rate, and then what kind of percentage of the profit?
Yeah, so depending on the deal, we're typically an 8 pref, so an 8% pref. And if I'm guaranteeing all the debt, our back-end promote is heavier than if it's a non-recourse deal or if it's a repositioning deal. Where the risk is much lower. And so it's back-end promote somewhere between 25 and 50, depending on really most of that is debt and how much debt we're taking on, how much risk, as the GP I'm bearing versus our LP investors. But we typically, our LP investors, we underwrite that to our targets of 30%. Low 30s, high 20s is kind of how we do our underwriting.
Cool.
So,
Thanks.
you bet.
Maybe like one more question, guys. Got it.
I'm just seeing these folks here, if they wanted to be you 15 or 20 years ago, I mean, you had your specific path through Sacramento and Intel and all that. But if they were a young finance major or something, or they were doing some entrepreneurial stuff here, they wanted to get some funding to do a project, what would you advise? Especially when you're kind of, rough cut, kind of new, you don't have a big track record.
Yeah.
What kind of things would you do to try to put the cash together?
Yeah, so find a fantastic mentor. So I had some really good mentors that mentored me through, going through schooling, going through, kind of a stable job, but kind of learning how to do the underwriting and the analysis and negotiations and all that stuff is great. But when you become an entrepreneur and when you have to go all in on this stuff, like find a great mentor that knows the space that you're going into. And what I found, when we went into the hotel space, had no expertise in this space at all, and really went and found the #1 developer in Southern California and just called him up and said, hey, this is who I am, this is the property that we have, we're thinking about doing hotels, like, can I get an hour of your time? And I was in Utah at the time. I would literally call him up and just be like, hey, he's super busy, he's developing, I don't know, 10 to 15 hotels at the same time with his team, and trying to just say, hey, will you give me an hour of your time? And so I'd literally just say, hey, I'm going to be in Southern California tomorrow. Can you, when can we meet? And I probably ended up having 15 of those 1 hour discussions, and tried to be super respectful of his time. But what he taught me in those 15, maybe it was 10 to 15 1 hour blocks was invaluable. And I would say, whatever you're doing, find the person who's the best in that space, and be willing to just be like, hey, what would you do in this? I'm negotiating with a VC, or I'm, raising my first, round of friends and family capital, or, the guy. What I found is the guys who have walked that path are very willing to share, and especially in this area, they're pretty open to, to sit down. So that would be my recommendation. My other recommendation is don't wait. So if you have an idea, go for it. So.
Sorry, I know this is probably the last question, but have you ever found that finding that mentor, like if you have an idea on something specific you want to go into, have you ever found a case where the mentor is just kind of like bug that you might compete against them, or?
No, I mean, there's very few. I think that successful entrepreneurs have a very like abundance mentality, where it's like, hey, like, come join us. I mean, I have a group of the naming's funny, but it's the Hotel Mastermind Group, and it's a bunch of the top hotel developers in Utah. We get together like once every other month and have lunch, and every single one of those guys, you know, you would think, hey, you know, we're developing properties near each other. Like, I build a hotel next to yours, I'm gonna take share. And what I found is everybody's like, hey, let's all work together. And so that's my take, is just having that abundance mentality versus a scarcity mentality, like this has to be mine and I'm going to protect it. And I think that's pretty prevalent that most people take that approach. So I don't know.
Yeah,
That's my take.
It's good.
So
Yeah, I just pivoted in my company, and so I had a mentor, but is there anything else that you would recommend that I watch out for as I shift my company to do something not totally different, but more hands-on and specialized kind of?
don't run out of money. So
It's good advice for all of you.
that's
Cash
the
is
number one
king.
reason businesses fail, is they run out of money.
Yeah.
So, you know, you've got to be very thoughtful on, you know, your cash position and understand the difference between cash flows versus, you know, a profit or a revenue number. And, you know, that's, as an entrepreneur, that's got to be your number one priority, is how do I generate cash flow, and not how do I generate revenue. Or if you're focused on, hey, I'm in a massive growth business, or you know, lots of inventory, right? Make sure you're properly capitalized. And so, if that means your own capital, if that means bringing on a partner, figure that out, because that's, you know, there's bootstrapping and saying I'm gonna do it on my own. But if you run out of business, if you run out of cash while you're doing that, that's, you know, you're done.
Yeah.
So I know that's just very generic, like,
Oh yeah, that's perfect.
but you know, cash is king, and so yeah. And I don't know what your business is. Happy to talk more, but yeah, great mentor. You know, relationships in that space. I'm amazed how many times I'm picking up the phone to some person that I met, you know, a year ago, but it's like, oh yeah, he's in that space. I'm gonna call him up and pick his brain, talk about it, and they just be willing to work hard. So, and hire great people. So when you go through that, you know, it can be painful to hire, you know, a senior guy to, you know, with a big salary, but figure that out, and as soon as you can, you like get great people to surround you with. So,
Awesome. Thank you.
yep.
Awesome. Thanks, Brad.